The central bank did raise short-term interest rates as expected for the third time this year. And it says also it's ready to hike a few more times in the new year, maybe 3 more. It was Janet Yellen's last news conference as chair of the Federal Reserve. And as Hampton Pearson reports, she started by giving an upbeat view of the economy.
At its last meeting of the year, Federal Reserve monetary policymakers raised key short-term interest rates for the third time in 2017. Updated forecasts see the economy growing at a 2.5% rate next year, with unemployment dropping below 4%. Monetary policymakers feel the economy is strong enough to possibly stand 3 rate hikes next year.
When you look at the projections, that there are many factors that affect those projections, and changes in tax policy, that's only one of a number of factors.
With President Trump and Republican leaders on the verge of finalizing tax reform, the Fed chair's last news conference was dominated by questions about the possible impact on the Fed. Monetary policymakers expect a modest lift to economic growth, business investment, and increased consumer spending. But they also voiced concerns about estimates it could add $1 trillion to the national debt over the next decade.
I am personally concerned about the U.S. debt situation. It's not that the debt to GDP ratio at the moment is extraordinarily or worrisomely high.
And lots of questions about the digital currency Bitcoin, which the Fed chair characterized as a highly speculative asset.
I really don't see any significant exposure of our core financial institutions to threats from Bitcoin. If its value were to fluctuate, I don't see a threat to our core financial institutions.
This was Fed Chair Janet Yellen's last news conference. She'll preside over one more meeting early next year. Between now and then, she says her goal is to provide a smooth transition to her designated successor, Jerome Powell. For Nightly Business Report, I'm Hampton Pearson in Washington.